Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, May 8th, with our pre-market morning strategy and briefing session. The title of my video, or kind of the theme of this video, is going to be indecision. I think you'll see that whole theme played out as we go through our three pillars here at GammaEdge, which are sentiment, structure, and trend. And we're currently looking at a market trend model. This is, if you've been following us for any amount of time, is based on the tick index. You can research that at your favorite investing website. But in the easiest definition, it is buying versus selling in the overall market, market participants. The bolded CT, this is our cumulative tick. Again, that shows buying versus selling and who's winning the battle. And then we add a time component to get a trend out of the overall market trend model. So as you've seen previously, the past week or 3 to 5, 7 days, we were in a strong uptrend on the CT, lower left to upper right. And then we started in a consolidation phase. We spoke about this multiple times over the past few days. As you can see now, the CT, the bolded CT, as well as the moving averages that give us a trend, is just meandering sideways. So if you're a directional trader, obviously this is a very difficult time to make any progress with your account. Just chop back and forth. The green overlay behind us here is obviously the SPX. And you can see really it's just been chopping between a couple levels for the past few days. So again, indecision, indecisive in the market as indicated by the market trend model. Now, our colored ribbon obviously continues to the upside. This is longer term positioning, obviously is flipped to the upside. So if you've been putting capital to work on a longer term time frame, basically this is just a chop consolidation area, and the market's trying to choose which direction. Will it be up, or will we see some sort of more pullback, possibly through the ribbon and down below the ribbon? As you'll notice here on our breadth indicator, this is new highs versus new lows. These have really been at parity. The green and red are basically at matching each other, so it's really no edge either way for stocks being bought or sold. Even yesterday, the new lows did edge out the new highs just towards the end of the day. And then we see our filtered cumulative tick. This is our institutional or larger market participants. This is filtered by plus 1,000, minus 1,000 larger block orders. So this did see selling the past few days. So it's kind of keeping that on our radar. Even though the market has went sideways, we did see some institutional selling. Obviously not significant, negative 24,000, but it is showing that we did see larger market participants and institutions selling a little bit into the sideways consolidation. So keep that in the back of your mind also. So again, as I said, the theme is indecision, sideways, as well as with our bolded CT, which is our market trend model. So we should be doing the same. We should be in a wait and see mode and not necessarily picking direction until this resolution comes to fruition and we have a clear signal to the upside or to the downside. Moving on to our SPXA, this is our cruise ship. These are longer term position contracts via the monthly. This is usually institutional or larger market participants. We are call nominated above and below spot price, so that is a bullish look of the SPXA and institutions supportive. But you will note that to the upside, we do still have in the money puts via the red negative net delta. We do see some greens, but the market speculation to the upside is just not there at the moment for a significant sustained move higher. And then we do have in the money calls below us, obviously indicated by the green negative or green positive delta. So again, this is supportive as long as we stay above these levels. You'll notice 5,600 is that key level with this gradient that we've been watching over and over, as well as 5,650. So if our implied open is above that, these two key levels of supportive type action to the downside would first be 5,650, and next would be the 5,600 level. To the upside, we'd be watching 5,700, all important gradient there of a key delta area to get above. If we want to have any sort of price appreciation to the upside, we would need to start changing these red negative net deltas to positive via either expiry or moving out of the money, and then obviously seeing market participants with out of the money call speculation. So we'll continue to watch this day over day, but obviously these are slower expiry turning over contracts. Moving on to our speedboat, this is our SPXP via the daily as well as weekly expiries. These contracts turn over much quicker. The reason we watch the SPX complex because it's the largest and most liquid, and that we can track and see an overall structure via that options complex. So we are put dominated via all expiries. This is indicated by the blue or purple tiles turned on, and we have our legend over here. So we are put dominated. This is just indicating that there's more put gamma above and below spot price. And you'll notice that actually the reds have been creeping in with the negative net delta above and below spot price, where we were completely call dominated below spot price. We do see some of those reds creeping in. Now, this can be a combination of two things happening. One, out of the money put speculation increasing here and here, or in the money call erosion from mechanical closing or expiry below spot price as well as above spot price. So in any form or fashion, put dominated is beginning to creep in a little bit more on all expiries, and we'll move on to the 0DTE and we'll take a look at that structure. 0DTE, we are call dominated above and below spot price, but do notice that we have a significant amount of in the money puts above us. So we are slightly call dominated here. This net GEX is only 1.8 thousand. So this could quickly change to a put dominated environment if we do see an erosion of the overall structure, or as well as a movement of spot price down, which would start changing these in the money calls below the implied open or spot price to out of the money, obviously picking up some more of that negative delta as we moved out of the money. And then conversely, if we had out of the money put speculation start targeting strikes to the downside, obviously this could lead to a little bit more erosion and pullback. As of now, we will be gapping up. Applied opens 56.85. So key level here, PGEX 56.50 is to stay above. You'll notice that our COI indicated by the green dot, this is the highest call open interest area, is actually 5,700, as well as the COTMC. COTMC, if you're not familiar with the letters or nomenclature here at GammaEdge, this is an area where out of the money calls become in the money, and most likely we can see some profit taking. So again, key level overhead 5,600. I think you'll see that confluence as well as the top of the drunken sailor range. The transition area would be the most important level to stay above. This will keep us in a little bit more call dominated positive gamma state. If we do get below the transition, then we, again, as I just discussed, we could start changing to a little bit more put dominated or less call dominated, less favorable state to move to the upside. So we'll continue to watch our transition level, 56.50, and then 5,700 to the upside. I'm not anticipating a significant amount of price appreciation. Obviously, expected move is 57.35. Again, unless we watch our intraday vol M commands, which is indicating where market participants, the mass of market participants via volume of options contracts are participating and placing their bets. So we would need to see a significant amount of speculation to the upside to overcome these in the money puts overhead. And as of now, as I discussed, that 5,700 is that key influence level, highest sensitivity level to the upside that we'll watch with the utmost importance. And then to the downside, obviously, transition and then a pullback to 5,600 could still be supportive. Well, these are in the money calls. These will be positive, supportive type flows as we pull back. But again, we'll have to continue to watch the market trend model to see if we see any erosion and if sellers can try to take control of the overall complex as well as the structure. Moving on to the SPXP +1 DTE. A lot of times we like to look at this for positioning for the next day, just to give us an idea of where we're at within the overall structure and if we're put or call dominated. So as of now, we're put dominated with the +1 DTE. So this is kind of the crystal ball until tomorrow. Obviously, we'll continue to watch this, but you see the red net deltas creeping in overhead. So the price appreciation to the upside may be dampened even via the +1 DT unless we see a significant change in the overall structure, as well as out of the money call speculation to the upside. So again, this leads us to that theme, back to that theme that I was discussing, indecisiveness within the overall market. It's kind of a wait and see approach. We have in the money calls below us that are supportive. We'll continue to dampen price action to the downside and most likely not open the door or floodgates to a large move to the downside. But we're really not seeing that positive speculation to the upside either. So market participants are in a wait and see approach, and they're pretty much happy with us being stuck between 5,600 and 5,700, that range at the moment. All right, moving on to the GEX ratio for SPX. One key component I want to note here is we look for divergence. So we've seen the price appreciation via the candles here. We basically had a consolidation, kind of two doji days here, obviously a down day here, and then a consolidation day yesterday. But we're also noticing the GEX ratio slide to the downside. Then we had a slight move back to the upside, but nothing meaningful. We are staying around that key 1 level. It's basically a balance between the short-dated call gamma and put gamma. So again, this is showing kind of a divergence to the upside, and then we saw a slope to the downside, indicating that we were losing that short-dated call gamma, as I just discussed. In the upside above spot price, we were seeing an erosion of that call speculation, as well as the in-the-money puts coming in. So we'll continue to watch this. If you're a bull, you want to see price appreciation to the upside via the candlesticks and spot price, as well as the red dotted line continuing to the upside, indicating the out-of-the-money call speculation or short-dated call gamma is overriding the put gamma. And then if we see spot price continue to the upside, price appreciation, but we see the red dotted line moving to the downside, then that obviously is a clear divergence, and then the price appreciation may encounter some sort of stalling or even pullback to the downside. Moving on to the SPXP delta balance. Again, just indicating what is happening above and below spot price in a different overall look. We separate this out. Obviously, the green line is the right-hand plane. That's above spot price. That is a call speculation or the in-the-money puts. So again, staying below zero indicates that that call speculation is really not there for the upside movement or significant price appreciation that we need to see at the time of doing this pre-market prep. The left-hand plane, again, above zero, indicating that we do have in-the-money calls below us, and those are maintaining, obviously with a slight positive slope, but not a severe positive slope to the upside. Delta balance staying just above zero if you would aggregate the left-hand plane below spot price, as well as the right-hand plane above spot price. So again, just flat to slightly up. So again, indecisiveness within the overall structure. Now, projected on out in time, we do see some sort of improvement, but this can change day over day. As we saw with the +1 DT on the web app, it was actually put dominated heading into tomorrow. So again, we'll have to watch where we open the implied open with spot price, as we can capture in-the-money calls to the upside just with spot price appreciation. So we'll continue to watch that. Moving on to the SPY, kind of the same thought process. Delta balance is pegged at 1, so this is indicating that left-hand plane and right-hand plane is slightly better, or a little bit more bullish than what the SPXP is, and you see the obviously significant positive slope to the upside on the delta balance, and you see the improvement of the right-hand plane. That would be out of the money call speculation, as well as the left-hand plane. This is in the money calls below. So SPY is slightly more bullish than what the SPXP is for the moment. QQQ, kind of seeing the same thing. Let me zoom in just a little bit for you. This is our obviously our interactive chart, so you can zoom in on this. Delta balance at 1, indicating left-hand plane and right-hand plane are call dominated, and we're kind of seeing the same thing as we saw with SPY, positive slopes in the delta balance, left-hand plane and right-hand plane. So a little bit more bullish overall structure in SPY and QQQ compared to the SPXP heading into the opening today. Net stack command, this is our high sensitivity levels. I think we've covered those extensively. 5,700, we do have out of the money calls at that level, so that will be important if we stay below that level. You see that right-hand plane integral is much smaller than the left-hand plane, so the in-the-money calls will continue to win the battle today as long as we're staying above 5,600, and then that net charm in-the-money calls will continue to win the battle via the left-hand plane integral and the right-hand plane integral if we stay above 5,650. If we stay below 5725, obviously these out of the money calls will continue to charm and grow that overhead resistance type area. So again, stuck between 5600, 5700, or even 5725, as we talked about to the upside, may be the overall play within that range, and we'll continue to watch that day over day. So heading into our trading view chart, thesis for today, obviously I've outlined these levels and we've discussed them pretty extensively. The drunken sailor range 5570 to the downside, 5700 to the upside. If you if TA is any part of your overall trading plan, obviously 5700 is a key TA level to the upside. We've talked about the in-the-money puts overhead. We've talked about those out-of-the-money calls there at 5,700, as well as that charm level at 5,725. And then on the full complex, we have COTMC at 5,737. So a significant amount of resistance and overhead ceiling to the upside. It's going to be probably difficult to overcome, again, unless we see a significant amount of out-of-the-money call speculation to the upside. So indecisiveness continues, and that's my theme of the overall day between 5,600 and 5,700 until we get some directionality via the MTM as well as the market structure, and we see that intraday positioning this overall chop may continue within this overall range. So just be careful, lower position size, quicker risk management, and that would be my overall theme unless we get a break to the upside above 5,700 that looks sustainable, or a break to the downside of 5,600. So hopefully that helps. Let us know if you need anything. Again, follow us on X. Check out our newsletter that's distributed every weekend, and our post-market videos that go over what we use for the tools intraday and how we placed our trades. So thanks, everybody. Make it a great day.